Fed chaos is brewing. Jackson Hole is where all eyes are. Today we're going to break it down for you. My name is Paul Barrow. Welcome back into the show. I want to thank our sponsor today, and that is Coinbase. This is where you guys can get started in cryptocurrency. And if you're brand new to crypto, all you have to do is jump over to Coinbase.com, set up your account over there. The future of money is here. And one thing you do get when you do set up your account through the link below is you can get up to $200 in crypto when you make your first trade. Check it out. It'll start you on your journey, guys, because this is going to get to be a heated market. It's very possible we may see some pullbacks that could open up some opportunities for buying. Breaking right now is the majority of the Fed members see inflation risk outweighing the employment risk. This is the single most important data point that came out of the Fed minutes today. And this is a big deal, guys, because if we continue to see most of the Fed members holding the line, this could continue to push the market down. Right now, the Fed when you look at the divided Fed, everybody is worried about tariffs and inflation, and the labor market is really the big question. I think that's the one that I'm more concerned about. I know that they're still looking at inflation, but I think when you deal with labor market pushes, it starts to affect retail. That starts to affect inflation because you're going to see companies losing revenue, and that is the big issue that we're dealing with right now. Here's a clip, though, that we'll get into a little bit more detail about one of the candidates that might be heading into the Fed and what he thinks. Take a look.
Fed funds minutes, the Fed minutes from the most recent meeting, which was in July, did come out, as you just referenced. Here's what, and remember, this is the meeting that had two dissenters. First time in decades where we have seen that, where two of the voting members said, we think we should be cutting rates. Almost all participants at that July 29th to 30th meeting viewed it as appropriate to maintain the benchmark interest at 4.25% to 4.5%. They saw near-term inflation rising. They said that's likely. Do you?
So I think it depends on your time frame. So if you said over the next couple of months,
what do you mean, your time frame? I mean,
so if you said, is inflation going to rise over the next couple of months? Are you going to see a bit of transmission from tariffs? You're seeing that. You saw that in apparel. You see it in electronics, you see it in household furnishings. You're seeing a little bit of elevation.
Estee Lauder today, $100 million tariff hit.
Right, so you take that and you say, okay, so what are we running inflation rise? We're still under 3%. Think about where we were a couple of years ago. And you think about the impact post-COVID. Today you're running at levels that I would argue are not that scary. Now, where are we going over the intermediate term? Productivity, technology, innovation is going to change the paradigm in such a significant way. The focus on the next couple of months, that do we have a price level adjustment from tariff? And by the way, alongside of that, you talk about Estee Lauder or some other companies, you have some growth elasticity to that, suggesting that, gosh, you may have a little bit of price pressure. It will create some dulling of growth.
But it'll be mitigated by technological advances. I'm reading AI here.
Totally.
So a couple of points that you could look to that are somewhat positive. Yes, that is very possible. It could happen. We could see productivity advancing in and reducing some of these costs. But at the end of the day, right now, we're dealing with real world aspects of where the market is right now. Losing jobs, and now we're starting to see some of our biggest companies here in the United States not report good earnings. And of course, this is Walmart hitting at 4% negative after a weaker than expected earning result. And the other thing that plays into this is really the next 2 quarters. That's the concern I have right now. Falling jobs and falling revenue for businesses. This is not a good match because we will continue to see possibly a lagging inflation, meaning inflation still holding on. But the worst thing that could happen is that jobs could play into this and create that double-edged sword, which is stagflation. That's the thing you got to watch out for. All right, so let's lead into this clip here. This is a Bloomberg analyst looking at spending in the back half. Again, this related into Walmart. Take a look.
Just to jump in, they also noted that prices only rose 1% in the second quarter. Does that change?
That's right. So yeah, it was 50 basis points in Q1. Q2 was 1.1%. We should see this gradual phase in. And Walmart CEO Doug McMillon, he was just talking about each and every week the the prices going up as the tariffs start to roll through. So that's very much expected. And I'd say so far we haven't seen any evidence of the consumer pushing back to a great degree. They've sort of eaten it and absorbed pretty well. That's the question, though, into the back half as prices get higher and higher, what happens to spending in general.
It was weird, though, because the CEO's comments were, this is a resilient consumer, but also higher-end consumers are now shopping at Walmart. Those two things would seem to be in tension.
Yeah, and I think that is something to take a look at because there are markets that are starting to shift from a demographic standpoint. What she just mentioned there is higher-end consumers now starting to shop at Walmart because guess who has started to fall, and that is Target, also taking a hit. And if you look at where Target has been, this is a bad chart for Target in general. I don't know that their new CEO, granted they have a new CEO because of that decline that goes all the way back into really 2022. And I think the problem that Target has been, well, we won't get into the detail, but they made some bad moves politically. It started to shift them down a market, I think, that maybe they just never come back from. And there's brands out there that are just in that place right now, and I think Target might be one of them. Well, one of the things you should be doing is maybe going out there and taking a loan on your Bitcoin. So when Bitcoin starts to go down, maybe that is the time you can start to unlock some of your wealth. And the way you do that is take a loan on it and lock it up. Only do a certain amount. Maybe most people look at loan-to-value ratio around 50%. That's a great way for you to re-leverage into the market and start to look at things like ETH acquisition, other projects that are out there starting to move. So be on the lookout. That's how wealthy people never take profits, guys, is they loan against their assets. One of the ways you can do it, of course, is saltlending.com. We'll leave a link down below. Of course, you guys can get started over there. They have Salt Shield, all those kind of cool things that are lining up for the best out there in terms of Bitcoin lending. Now, spending-wise, though, it really gets in kind of this next level because what we're dealing with still is whether or not we're going to get a Fed rate cut. And now we've got another Fed member, Hammock, says she does not think that there is a case for a September rate cut. So again, more data saying that there are more Fed governors saying no rate cuts in September. This is a big deal because if you look at Polymarket right now, the percentage of no change has now spiked up to, where are we, 36%, likelihood to go to 40. That means it's a 60-40 potential right now on a quarter basis points. I'll zoom in on that to give you guys a really good look at this, but that's a big, big issue as we start to move forward. Not only just for markets, but for our economy in general, because the further we drive real estate market and businesses into despair, that is a bad thing for jobs, and it's also a bad thing for the U.S. economy, which is what's going to be playing out right now. Now, the issue right now, of course, is the Trump administration continuing to put pressure on the Fed. Now they're going after the individual governors. This one, of course, was one of the governors that had an issue with mortgage fraud and basically saying they were living in a house that wasn't the case. The point being is that I don't think they should be doing this. I think we should be presenting economic data. Going into lawfare, I get that that's happened before, but I don't think this is something that they should be doing. I think you just focus in on the simple things. Companies losing money now, some of the best companies in the U.S. not performing well, and people losing their jobs. That may not be a good sign for President Trump. All right, so I want to go to a clip real quick because many people are looking, is this maybe a chance for you to sell some Bitcoin, grab an ETH opportunity? Is that a play? Listen to this clip. This is how Anthony Pompliano responded. Take a look.
The folks that are selling, you think are selling for what reason? And the reason I'm asking that is I've heard from a bunch of people who have actually sold some Bitcoin, moved it into Ethereum. That actually has been one trade for some folks. There's another trade among sort of folks who are interested in blockchain, but not necessarily Bitcoin per se, who've actually bought into Circle, for example, publicly traded company that sells stablecoin, that it's a stablecoin business. Do you see people moving from one place to the other?
Well, some people are definitely doing it. I don't know if I would suggest people do that. The whole blockchain, not Bitcoin, is kind of like a 2016, 2017 viewpoint. I think that's been pretty much disproven that Bitcoin is the king. It's been the king. It's going to remain the king. But on top of that, I do think that there's a lot more opportunities for people to play this. And what you are getting is you're getting capital markets where people are optimizing for different things. Some people want yield. Some people want infrastructure. Some people want the actual underlying asset, Bitcoin itself. And so I think that you're going to get fracturing of capital, which again leads to that muted volatility.
Okay, well, I agree with Anthony there, and that is, yeah, fracturing of capital. We could see the kind of flipping of how this trade may play out. Other things that are contributing to that, of course, has been the DATs, the digital asset treasury companies out there. And if you look at this chart starts to show some very interesting things, and that is we're starting to see the move where these ETH DATs are now outperforming the Bitcoin digital asset treasuries, including MicroStrategy. When you look at all of them compiled, that's a big transition in the market because we are very early stage. MicroStrategy's been in this forever. We are now in a very early stage. And if you just look at some of the companies that are in here right now, I'm looking at the strategic reserve right now. Let me show you this right here. I'll expand this growth historical data. Look at the amount of growth we're seeing. And these bubbles, those are the size of the deals that we're starting to see move within these. All of this very positive for Ethereum, and it may be in a position where we could see a lot more companies starting to come in. Right now, I think it's mostly crypto friendly or people that have been in the space, but I think we're going to see a lot more possibly traditionally traded companies starting to hold a lot more U.S. Treasury in the term or face of ETH. One thing to consider is when you look at this rush into these treasury companies, now it could be one of two things. One, it could be just a new asset class that's going to, continue on. We saw it could go the way of SPACs, but it also could go the way of the .com boom and bust, where we saw a massive amount of companies go in and not a massive amount of companies come out. However, the companies that did come out of those eras were legendary. So it's very possible we could have a legendary company coming out of this era right now that we're dealing with around ETH treasuries. So keep a close eye on this one. It will push things into a very interesting trade. And if you're looking at the ETH Bitcoin chart right now, it's looking pretty good. This is where it broke out of a 4-year downtrend. So it's flipped its resistance, and this is kind of what they're talking about. If you look at the actual chart, I'll jump over to the ETH Bitcoin chart right there. This is the point we're looking at, which is where we started to see a lot more movement in the altcoin market, but primarily what we're talking about is the ETH market. And that in general is a big deal right now when you consider where the potential trade is as ETH starts to trade much more positively against Bitcoin. Other thing I want to hit on right here is what JP Morgan is saying, and that is that Ethereum is now poised for a meteoric growth. And should you buy ETH now? Now, the question is this is TradFi? Yes, I know, Paul, don't pay attention to what TradFi guys, they're late. I don't think so. I think we're dealing with a shift in how TradFi is realizing that the next evolution, they are now part of it along with, guess who? Us. And that's a good thing, I think, in general, in the sense of that more people will be opened up to crypto. What I mean by that is just understanding what decentralization is, understanding what tokenization is, especially for real-world assets and things of that nature. All of this very good news for crypto in general. All right, if you guys are not part of the Diamond Circle, make sure and get in on that. It's our own private group that we send out updates to you guys on some of our research, additional opinions of mine. I do all sorts of newsletter updates over there on what I'm seeing in the market. You guys can join down below for absolutely free. Hit me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.